How do
This
you
is Wallet
handle
Brief,
tight
where we break down what
deadlines and
actually moved the
pressure?
US
I
economy this week without
prioritize
the noise.
tasks
If
and
prices,
maintain
interest
clear
rates, jobs,
communication with
housing,
the
or taxes
team.
are quietly changing your
I
money,
find that
this is where you stay informed.
organization is
Let's get into what
key.
really happened this week and what it means for your wallet. Over the past several months, the US job market has shown surprising resilience. Even as interest rates stayed high, hiring continued at a steady pace, and unemployment remained relatively low. However, there have been early signs of cooling beneath the surface. Slower hiring in some sectors, fewer job openings, and more cautious employer behavior. This week, the latest jobs data added to that mixed picture. Payroll growth came in steady, but not as strong as earlier peaks, suggesting that hiring is still happening, just at a slower pace. The unemployment rate held relatively stable, indicating that layoffs are not rising sharply, but the pace of new job creation is moderating. At the same time, wage growth showed signs of stabilizing. Pay increases are still happening,
If
but
we
not
look
accelerating
at
as
this
quickly as
Q3
before.
projection
Some industries,
here,
especially
the
services and
growth
healthcare,
potential
continue
is
to add jobs,
significant.
while others like tech
Absolutely,
and
the
manufacturing remain more
market
cautious.
response
So what's the
data
real trend right now?
supports that
The job
trend.
market is cooling, but not weakening dramatically. It's shifting from a hot, fast-growing phase into a more balanced, slower growth environment. This is exactly the kind of transition policymakers have been aiming for, reducing pressure without triggering widespread job losses. This
How
week
do you
reinforces
handle
that
tight
soft landing
deadlines
narrative.
and
Hiring
pressure?
is still
I
positive,
prioritize
unemployment is stable,
tasks
and wage
and
growth is
maintain
moderating.
clear
All signs of a labor
communication
market
with the
that is
team.
adjusting rather than breaking.
I
So how does
find
this hit
that
your money? For
organization
workers,
is
this means
key.
job security remains relatively strong, but switching jobs for a big pay jump may be getting harder. Employers are becoming more selective, and hiring processes may take longer. For households, steady employment supports income stability, but slower wage growth means less upward pressure on earnings. If you're already employed, things may feel stable. If you're job hunting, it may feel a bit more competitive than a few months ago. There's also a subtle shift in bargaining power. Employers are gaining a bit more control compared to the previous year, when workers had more leverage. Looking ahead to next week, markets will be watching for any new signals from jobless claims data and employer hiring trends. These early indicators will help confirm whether the labor market continues to cool gradually or starts to weaken more noticeably.
If
That's
we
your
look at
wallet
this
brief
Q3
for this week.
projection here,
These
the growth
changes don't
potential is
always make
significant.
headlines,
Absolutely, and
but they
the
do
market
change how
response
much you
data
pay,
supports that trend.
save, and earn. We'll be back next week with the updates that matter. Until then, stay informed and protect your wallet.